Hello, welcome back to the series of economics in the platform of Abhigyan Academy. Today we will discuss on a very basic, a very important concept though of economics. When you first go for studying economics, say in your class 11th, in your senior secondary, then you get the first concept called the circular flow of income. Okay, let me repeat the topic. It is the circular flow of income. So here in the screen, you could see a very big diagram. There are very complex chart which is representing the circular flow of income. But actually, it is not that complex that it seems to be. It is exactly the opposite what you are watching. So, circular flow of income. So, when we listen to this term circular means circle. It means ki from the point where it starts at the end, it will again meet in that point. Okay. If I start from this point, then it will move around the point and again it will eventually meet in this point. So this is circular. So circular flow of income means it is the income which is flowing from a point will again get absorbed in that particular source. So that is the meaning of circular flow of income. But now we will explain it. Now, if I ask you that among this three um, components of an economy, that is household, financial market and firms, which component has the highest amount of cash with it? I repeat the question ki among household, financial market and firms, that is business firms, which among of them has the highest amount of cash? The answer will be household. Household has the highest amount of liquid money with it. Okay. Now, how does this circular money starts? The households which it has liquid money, it spends in two uh, point. One, in the mode of saving, that is the surplus money the household is just mobilizing it to the financial market. Say for example, financial market, say a commercial bank. All right, a commercial bank. The household is mobilizing its surplus money, that is savings, to a commercial bank, which is a component of the financial market. Okay. And also the another point or destination where the household is giving its liquid money is to the firms. How? By the mode of consumption expenditure. Here you see the consumption expenditure. The arrow moves like this from here to firms. Consumption expenditure means these are the expenditures that you do on your day to day consumption. Say for example food, say for example traveling, clothing. These are your consumption expenditure where you spend your money to fund your necessities or your wants. You purchase and you use it, you eat it, you wear it. Those are your consumption expenditure. And the surplus money you are moving it to a commercial bank or financial market. All right. Now, what does this financial market is doing? See, this is the point where we started. The fund is flowing. The financial market will give those money to the firms in the name of borrowing, or they will grant loans to the firms. The financial market or banks, they will give money to the companies, money to the business houses, money to the factories, industries, to take money from us and do economic activities. So now the money will move from financial market to the firms. Okay, now the firms has the money of the household. Now you see in these firms who are working, in these firms, the member of the households are working here. In an industry, who are working? You and me are working. Yes or no? and we are the members of a house, member of the household. We are working in a firm. When we work in a firm, we get our remuneration. So in the form of wage, in the form of salary, or in the form of rent, etc. All right. So the firms again gives the money to the member of the household, and again the money is moving to the household. See, one circle is completed here. Here you give your money, you purchase your goods, or you are moving your savings to a bank. The bank is giving money to the firms, and the money is again moving to the household finally. All right. Now, if we see from the point of view of a firm, the firms are also keeping their money, surplus money with the commercial bank. So, savings. All right. Now, the financial market also gives loan to the household also. Household members, me and you, we also take loan, maybe for investment purpose or maybe for consumption purpose. Here also they give loan. So when the household gets loan from a bank, the households again spend the money on consumption expenditure, or the household spends money on certain factor service like purchasing land, labor, or capital, or they are doing the investment. See, this is a consumption expenditure and factor service. You can say it is investment expenditure also. Like they are giving their land, they are giving their labor, and they are giving their capital. And in return, again the firms are giving them factor payments in the name of rent, wage, salary, etc. So ultimately, from the point where the money starts flowing, the money again gets absorbed, whether you take this point or you take this point. So a money, this this money is moving in a circle. So hence this concept is known as circular flow of money or circular flow of income. Now, where is the problem arise? How can we link this circular flow of money with inflation? All right. Now look. Now suppose if the household, they are not mobilizing their saving to the commercial bank. They're just keeping cash inside their home, and whenever necessary, they are demanding goods and services. Now, firms require money. Firms require money to function. Now, financial market definitely gives the money. Financial market or commercial banks money from where? Commercial banks get money from a household. Household surplus money is mobilized or channelized to a company through loans. But here financial market are not getting money from the household. So now financial market will have a cash crunch. So what will happen? Financial market, the component of financial market, say RBI, Reserve Bank of India, will print new currency, has to print new currency. The government will order to print new currency. So new currency will be given to the firm, and the new currency will flow to the household. Now the household will get new currency. Okay. Why? Why new currency? Because the household has restricted mobilizing saving to the financial market. So they will get new currency. That means new currency means new money, more income flow, and hence they will do more demand now. And if there is more demand, there will be more consumption expenditure, and ultimately the firms will rise the price. Again, if with this new currency, if they does not mobilize the saving, more new currency will be printed by the Reserve Bank of India, and more money will enter the flow. So if and only if household does not mobilize the saving, a problem of inflation, high inflation will take place. All right. So this is the concept of circular flow of money, and how not mobilizing surplus money by the household creates the problem of high inflation has been explained. All right. So thank you so much, and best of luck from my side.